Dear investor, Edelweiss Private Wealth Management is pleased to present you the latest issue of Investment Strategy Report for May 2019. Let's take a look at key highlights of April 2019. Chinese economy grew at 6.4% year-on-year in Q1 2019, beating the consensus estimate of 6.3% year-on-year growth. The growth brings hopes for emerging markets as well. US, on the other hand, continued to show mixed signs. Housing starts and existing home sales continued to fall, and so did the industrial production to 2.8% year-on-year in March 2019 from 3.5% year-on-year in February 2019. However, retail sales and ISM manufacturing showed some pickup. It indicates that the US economy is slowing down but has not entered a recessionary phase. US government will no longer permit exemptions to the sanctions laid on oil exports by Iran. For India, it may create temporary hiccups. However, as long as oil prices are below $80 per barrel, the current account deficit will remain in the range of 2.2% to 2.3%. We expect RBI to cut rates further in their upcoming meetings as inflation continues to be muted. Since the output gap is negative, there is a scope to cut policy rates to boost growth without risking rise in inflation. India trade deficit for financial year 19 stood at $176.4 billion, up from $162 billion in financial year 18. Thus, current account deficit for financial year 19 is expected to be 2.2% of GDP. Nifty is expected to clock in an aggregate PAT growth of 12% year-on-year in Q4 financial year 19, according to Bloomberg consensus. Banks would be the major driver of profitability. Continued benign inflation, coupled with historically low levels of money supply, as well as a negative output gap, warrants further rate cuts from RBI in the coming MPC meetings. Equities are expected to react positively to the dovish turn of the RBI. Lower interest rates make credit more affordable, and we may see an increase in demand for autos and consumer durables. Despite the recent recovery in mid-caps and small caps, we continue to believe that returns from these categories would relatively outperform those from large-cap space over the next 3 to 5 years. Liquidity in the banking system is still constrained even after injecting 2.8 trillion rupees in financial year 2019 by using OMO. Hence, RBI has announced one more OMO of 25,000 crore rupees, which is scheduled in May 2019. RBI has been actively trying to infuse durable liquidity through the use of dollar-INR swaps. Around 35,000 crore rupees was injected through the second auction for USD-INR swap on April 23rd. Corporate bond spreads have come down by around 20 basis points in the last 2 months, indicating comparatively easier and cheaper borrowing conditions for corporates. However, when compared to their respective long-term averages, they are still attractive for investors from hold to maturity perspective. We recommend investors to focus on hold to maturity solutions to lock in currently available attractive yields in corporate bonds and STLs. For tax-agnostic clients, tactical allocation to duration can also be considered.